Hello everyone, Ben Kingsley here, and normally it's myself and Evan Lucas beside me as we do the economic and RBA update, but Evan's actually got an opportunity to head to the press conference, so he'll be listening to Governor Bullock this afternoon and potentially asking a question of the governor in terms of the decisions that they made today. So we're counting down to that decision. It's only very, very close now to 2:30. So what we want to be able to do is talk about where do we see it going. Like ultimately, we think we've ticked all the boxes. Trim mean is at 2.79 inside the 2 to 3% band. Actual overall inflation is now sitting at 2.09, thanks to also some government, sort of energy rebates that are also helping on the energy side for inflation. But basically, that's where we sit. So let's have a look. Let's see. Hopefully, we'll get an update. Yes. So we got the 0.25 adjustment here. So let's jump in here and have a look at the statement in terms of what they did with the cash rate. So it's obviously an important sort of statement on monetary policy, as well as why they moved the cash rate. So that's obviously a big decision in terms of that monetary policy decision today. So let's have a quick read in terms of inflation continues to moderate. The outlook remains uncertain. In terms of maintaining price stability and full employment still remains a priority. So I suppose off the back of that, what we're talking about is underlying inflation continues to decline back towards the midpoint of 2 to 3% range, and the labour market conditions are easing slightly as expected. The board judged that a further easing of monetary policy was appropriate. This takes the decline in the cash rate since the beginning of the year to 75 basis points. The board nevertheless remains cautious about the outlook, particularly given the heightened level of uncertainty, both in aggregate demand and potential supply. It noted that monetary policy is well placed to respond decisively to international developments if there were any material implications for activity and inflation in Australia. The board will be attentive to the data and the evolving assessment of the risk to guide this decision. In doing so, it will pay close attention to developments on the global economy and financial markets, trends in domestic demand, and the outlook for inflation and the labour market. The board is focused on its mandate to deliver price stability and full employment, and will do what is considered necessary to achieve that outcome. So remember, they're dual mandates, full employment, as well as also managing that inflation measure, blunt instrument, but that's effectively what we got today. So we got a 25 basis points cut. Now, in terms of what that means, let me just share a little bit of data because we prepared some data earlier. So let's have a look at this data over here. So what does a 25 basis point cut mean? Well, this is a little Instagram post that we put together earlier. I've got to hit the share button. So hopefully everyone can see that now. So on a $500,000 loan, you're seeing that it's a saving of around $1,250. Makes a lot of sense. 600,000, etc., right up to $1 million. So just think of it logically: 0.25, 25 basis points, $1 million. That equates to $2,500 saving on $1 million loan as well. So that's the annual savings you get. Of course, if you were to factor in the full 75% movements that we've had from those peaks, naturally 0.75 on $1 million is 7,500. Divide that by 2, and you get down to 3,750. So there you have it. That decision has been made. We're definitely pleased to see, hopefully we were expecting it 5 weeks earlier. We didn't get it 5 weeks earlier. We got it now. So ultimately, cash rate now down at 3.6. If you caught our economic update that we released at the start of the day, and you can find it on the YouTube channels as well, Evan and I did a sort of more detailed brief of the global economy, US, China, Euro area, and also a deep dive into the Australian economy when Evan was here yesterday. But as I said, he's in Sydney about to meet the governor and ask her a difficult question, which I'm looking forward to. But you can check that update out as well, where we go deep on those different types of economies. In terms of the outlook, in terms of where neutral rate will be, we're still projecting a live meeting in November, and then potentially another live meeting in February, bringing that cash rate into that sort of 3%, 3.1% range during that time. So thanks everyone for this impromptu little live that we did. hopefully that gives you a bit of an update in terms of what's happening. Cash rate down 25 basis points to 3.6. Thanks everyone for watching, and we look forward to giving you further updates. And remember, Property Couch, new episodes live every Thursday, where Bryce and I wax lyric about all things property, finance, and money management. Until that time, remember, knowledge is empowering, but only if you act on it. Bye for now.